That's not supposed to be there. It must have been from yesterday. Hang on, I'll just fix that up for you and give you the right one. I think that's the right one. Trading Buddies, there you go. Welcome aboard and happy new trading week to you. Not a lot's changed. Well, a lot has happened, but not a lot's changed as far as the market's concerned when we last saw you on Thursday. And I've got to say, got to get some profit in the bank early. Otherwise, they'll take it back off you. All these V-shaped charts that I'm seeing all over the place are very, very commonplace at the moment as the market tries to decide exactly what to do with this this Ukraine thing, as do the protagonists and, of course, those sitting on the sidelines. Latest news that I'm aware of is that we're now offered a summit from Joe Biden. Okay, let's have a summit. Why not? I don't know if that's going to mean one iota of meaning to Putin and co. But hey, let's have a summit. Why not? And of course, the market has gone from there to there on the back of that announcement. One would think that's what was driving that announcement anyway. I would imagine so. G'day, Paul P. Happy new trading week to you. It just makes it a little more difficult, really, to gauge what positions to take and what sort of bias that you. Well, I've got a bias. My bias is for safe havens until we get this sorted out. I've got a particular bias today and for the week, and it's got nothing to do with war. Well, sometimes we have wars with New Zealand, but I'm tipping Australia versus New Zealand in dollar terms to go down this week. That's my favourite play. And we'll get to that in just a tick. First up, however, let's talk about the pound and the US dollar. And as I said, bang, US dollar strength, bang, US dollar weakness. Not so much to do with the pound, really. I think across the board we saw that. The euro, perfect example, complete V-shape, bang, down, up. And that, as I said, I believe that's on the back of wars on, wars off. As I said on Thursday or Friday in my preview, it's Miyagi wars or Miyagi market, as far as I'm concerned. Risk on, risk off, you know how it goes. And that's precisely what I'm seeing. And therefore, I think my approach this week will definitely be with currency pairs that don't really have a direct correlation to what's happening in Ukraine. And as I say, Aussie Kiwi is probably the one that I'll choose for that. A couple of reasons for it, but I'll give you that in just a tick. Let's go back to the pound. Is there a breakout trade to be had? Well, I think the chart really speaks for itself in that any breakout that I see that's been attempted, it'll break out here, false. It'll break out here, false. It'll break out, or bigger breakout here, false. Breakout there, false. Breakout here, false. Who's to say this one going in the opposite direction is going to take out the highs? Not me. I'm not going to say that. And if I were to trade a breakout trade today, it's exactly what I'd be saying, that there is a possibility, well, it's certainly a possibility, it's always possible, that pound US dollar will go that way and go through the high here. Because our range, if we were to trade the range break, would be between there and there. In fact, it would be up, sorry, that's wrong. It would be between there and there, Friday's range, in fact, which is 70 odd pips to the downside. If you were to trade short underneath that bar, you're pretty much bang on the weekly pivot. If you were to trade long above that bar, it's probably got more prospects than the short. So above that bar, there is a fair bit of blue sky, to be fair. So do I trust it? This is a range, don't forget. And it's been there since February 2nd. So that's a fair swank of time. 3 weeks that we've been in that range. And unless something's done in terms of pressing buttons to launch bombs and things, then I don't think we're going to break out of this range. I think we're just going to continue in there until something does happen. So I'm not trading the range break. To get that 70 pips, by the way, you'd have to be going where to weekly resistance 2, and we're only in the first day of the week. Don't know about that one. And also, if I go to the US dollar, that's oil. If I go to the US dollar, you can see it. And look, I said this a week or so ago that I thought if the US dollar broke out of this area here, where we had a horizontal level, we had a resistance trade line coming through here. We've certainly got a support trade line coming through here and another support trade line coming through here. I thought as soon as we broke out of that, we would go either down here or up to here. No, not the case. And this fracas, I'll call it, also, that hasn't started yet, if it's going to start at all, is probably the reason that we're just going up, down, and there's certainly the announcements that have been made are contributing to that. So I don't know, guys. I really don't know what happens next. I do know what happens if war breaks out. This goes up here, in my humble opinion. But until that happens, I don't see a reason why the US dollar would break down beyond this point. That doesn't make sense to me. So it's really only upside there that I would be contemplating. We shall see. Anyway, trade that we took on Thursday. We're still in the market there, but I have moved my stops to entry, protected by the weekly and daily pivot. But the market, like I pointed out earlier, has gone V-shaped almost, certainly on the smaller timeframes. And with that announcement that the potential summit between Biden and Putin is now scheduled, I think it's scheduled, the market has rallied a little bit and gone, well, I won't say risk on, but it's turned the tap off, the risk off scenario, the way I see it anyway. So it's tempered a little bit, that announcement. I don't think that this is going to make one iota of difference, frankly, to the market ultimately. And I do see further downside in this cross. I hope we can hang on with our stop loss at entry, as I say, and pick up a second entry here. That would be my preference. So I'm a bear still on Euro Yen. I also picked up a trade on Euro Swiss on Thursday late or Friday, I can't remember when. I thought that was pretty much the same trade. As it turned out to be, we entered here on the back of a slingshot candle pattern and got TP1 no problem. And you've got to ask, this is why we're not really in, to my mind anyway, a technical situation. That really had to, if it broke out of that area there, hit the monthly pivot. Didn't, of course. And again, on the back of the potential summit, I believe anyway, that's what's caused that. But I still see this as a sell. And if I can pick that up again, I'd be only too willing to do. But let's get to my trade of the week. Well, my preference of the week is not a trade yet. Maybe it is for you. I see Aussie Kiwi as being a sell. And the reason, well, there are reasons that I see Aussie Kiwi as a sell. That's the weekly chart I'm looking at. So we've bounced off that level already at a confluence area with the horizontal level, which is 1080, pretty much. Hang on, I'll just skip over here. And that looks pretty cool to me as a bounce off that area. Now, to trade that bar is not my MO, because I'll be trading straight into the monthly pivot. But I'm super keen if I get a reversal bar off the weekly or daily pivot up here, then I can definitely look at that short. That may or may not be happening as we speak. We've got, a couple of hours remaining in that candle before I can do anything. But to me, Aussie Kiwi is tipped again to raise interest rates up to 1% in 2 or 3 days' time. The Aussie is having another spat with China I
Sorry
don't
to
think that's
interrupt,
going to
mate.
be.
I think there's a
hello,
trade on the
mate.
FTSE.
It's Monday.
I think there's a trade
Okay, then
on
let's
the
have a look at that
FTSE.
trade.
Oh no, it's for a long, just so everybody knows. I have to try and get in quick if I can just get in the room. Okay. Here we go. Yeah, we should be okay. Got time here. And I completely agree with you about the potential for the meeting or the summit to not mean anything. But I think we might just get a little bit of a relief initially this morning.
Yeah, we're seeing that. But really, does Putin care that he's going to have a meeting? And will he even go to a meeting with Biden?
I don't know, mate. I don't know. Here's the trade here. And I think this is achievable. So there could be a 20 pip gain here, and if we just so it's for a long, as I say. If it doesn't hold up here, then I'm going to go in probably again at the weekly pivot. So I'll see if the picture changes, but I think right now it looks okay. Now, why here? You may well ask. I don't know if you do, but. Let's just point out why this area looks to be relatively solid. And this is one aspect. You can see we're only on a 15-minute chart. So, there's no reason for a 15-minute chart to really provide us with any decent support. But when we kind of just come out a little bit, what we actually have is there's just a little hourly trend line going along here. And that's what we've just poked ourselves above. Very negative looking bar. Well, a bit of a negative looking bar, this one. That was just before the start of trade. So it's possible that this one plays out and we do end up at the weekly pivot and maybe even lower. There's no guarantee. I'm not going to put an order in at the weekly pivot. I really want to have a look at what happens down there if the market fails. This is the obvious first contact. And will that give us enough? Yeah, that'll give us enough actually. So I might well come out there. That'll be enough for me anyway. So you can either come out here, or you can risk it a little bit and see if you can come out on the upper trend line, which is being created on this 4 hour and maybe even not so much the daily, but you can see on the 4 hour there's an upper trend line. So there's a 4 hour trend line, the hourly trend line. I'm just looking to see whether that can just give us a little bit of a boost. I'm only really after the first contact, and this does look like first contact. So there to come out, possibly there if you want to hang on that little bit more. And the second area to come in is here. If it breaks down below that, then I wouldn't be interested. In actual fact, I'll probably be hedging and maybe even flipping positions to go short. But right now it looks okay, mate. The market is has opened up in not too bad a fashion. We got US President's Day as well today. And that's not really knowing, I'm not. I don't have my finger on my pulse on the seasonality data in quite the same way as let's say Ray or Julian is amazing at this stuff, where he can pinpoint specific holidays and say this day usually does this to the market. I'm not so aware of that stuff. I'm sure I could find it out on Ray's website, but I'm not going to do that because I'm only after just a few pips of gain here, so I'm not that worried about it. But there is data that would suggest that whether President's Day tends to be good or bad or indifferent, and that may help if people want to go and research that. But it is the US holiday. Does that have a play? Well, I can tell you that volatility is quite low, so it might well have a play on participants, and that might mean that that we get just a couple of bursts, during the day. Depends on sort of like which side of the boat that people sit on, but it looks relatively comfortable. I'm not going to say confident, but it looks relatively comfortable. So I suppose because we've just reached this first point of potential support and it looks comfortable, I'm going to see whether we just get a rally to the next point of resistance and see if we can come out of the trade there. But it looks all right, mate. It doesn't look too bad. Oil's coming down, which I think is quite interesting because the oil play. I say oil's coming down. Let's have a quick look. oil's been in a bit of a downtrend. And I think the oil plays quite a good one to look for as a bit of a barometer, because what we've seen with oil is the potential for conflict pushing the price up as people start to panic. They're sort of worried that a choke of further supply could push that price up. But we're seeing oil come off a little bit. We're seeing gold just drift down, initially from the start of the day. Does this end up holding? It probably will. We don't, as you said, we don't really have anything concrete. If things start to look a little bit calmer, the likelihood is that we break through these lows with gold, and we do start to get a genuine retracement, maybe back down to this 1875 area. Oil probably, we could see oil come down as well, because the oil story isn't just about Russia and Putin. The oil story is also about the Iranian deal with the United States, where they're trying to do a deal with Iran to try and increase supply. So there's a few things that could suggest further supply in oil, and the United States are working hard on that to try and curb and choke the problem with inflation. So those things, if we take them without Russia, would suggest a little bit of a pop in the stock market. Russia is an issue, and people may just not want to trade during this stage, because it's impossible to know what's going to happen from one day to the next. As you said, we've had this summit, this potential summit between Putin, Macron, and Biden. That's going to help things out. But will it come to fruition? Don't know. But we might get a relief while he decides.
We've also got, and again, what do you believe? We've also got reports that the US have absolute rock solid intelligence that Putin has already ordered the invasion.
Yeah.
What do you believe?
Well, I think that's one of those pieces of information that will come to play as we get through the week. But because I suppose we've got this little glimmer of hope, we might get just a relief rally today. The trend is down. We should be looking for downside, but on the shorter term, we might be able to play a few pips to the upside, and I guess that's what I'm looking for on the day.
Yeah, look, I agree. I don't think the position has changed at this point, and down. I think that's why I need to be looking, certainly with the risk on currencies, and the Aussie comes right into, and the yen on the flip side comes into that as well. Yeah. So does the Swissy. I'm surprised that the euro actually took me out of euro Swissy today. I didn't think it would rally that hard, but it has, and fortunately for a break-even trade, not a loser. But there you go. This may do the same.
I mean, euro. We found PPI data from Germany, which was a bit better, or beat expectation. Anyway, we got French flash PMI as well. What did that come in at? Or is that not reported? That's in a couple of minutes. So we're going to get a little bit of data from the euro block, but that PPI data 2.2%. Previous was 5%. So. I mean, that's the so the PPI data is just, so everybody's aware, is kind of what businesses are paying, and there's a little bit of a curve there in the numbers, which actually is pretty good for the market potentially, but the forecast was at 1.6% and it beat it by 2.2%. So still we're seeing those production numbers go up. Sorry, the forecast was a little bit higher. So maybe that's another reason. That was at 7 a.m. I don't know when the euro trade took you out, but that was at 7 a.m. We got 7 a.m. UK, so about an hour ago. We got those numbers.
About then, I reckon, yeah.
But yeah, 8:15, we got flash PMIs. German flash manufacturing PMIs at 8:30 as well. So there's a few things coming out with the euro block today. Not a lot in the way of news, but just some flash PMI numbers, which could give us an idea of the health of business. And if business and manufacturing and services are still doing well, that would probably put more pressure on the central banks to put interest rates up, because they can see that the economy is potentially able to handle it.
Cool. Before George comes in,
yeah.
I'll quickly give my reasoning behind the Kiwi if you're done there.
Yeah. All done, mate. All done. The trade is on, and this is where we're at with a FTSE trade at this current stage. It looks like slightly above the profit line, but here's the target. I'm only aiming for about 10, I think, here.
Okey-doke. So Aussie Kiwi, that's Euro Swissy. And I'm looking at it because if this news settles down, there's almost a trade there for me. It's a nice little candle pattern, and it's also suggesting that there's a false break of this support trade line. So we've broken through there, come back and retested it. The issue, of course, is where we enter, and that's bang on the weekly pivot. Might have to get your entry above there somewhere, but I'll come back and have a look at that in a minute. Aussie Kiwi. Now, I think I gave one or two reasons that Aussie Kiwi is a trade for me, not least of which a technical reason, which is on the weekly chart, we appear to have bounced off this confluence area. Monthly chart, that looks similar, but not as compelling. And the reason it's not as compelling is that there's the weekly trade line there, really, and here's the monthly. Of course, the monthly should overpower the weekly, one would think. And for that reason, I think eventually we'll probably find our way to here. Now, whether that's via this line, whether it's via a break of the weekly trend line, who knows? Got no idea. But that's what I see that as an eventual target for Aussie Kiwi. But this week, there's a few things going for the Kiwi. And one of them, of course, is the BNZ will meet on, I think it's Wednesday or Thursday, and widely tipped to raise their interest rates up to 1%. I think they're at half at the moment. So that's a full 50 basis points. I could be wrong with that. Forex Factory would probably tell me. They may be at 0.75. I can't remember, to be honest.
Who's that? The Kiwi, yes. Yeah, I think they are at 0.75. I'll double check it for you.
Yeah. If they are at 0.5, that would mean a 50 basis point rise, which would be bold, very bold.
0.75.
They are, right. Okay. So they're tipped to go to 1%, are they not? They're very
they're front running the market. I'm quite surprised about the country and the economy that is doing that in the Kiwi. But yeah, they're quite happy to as you say, be quite bold and just do looks like they're going to do what's necessary. They have been a nation that has been on their own path with this thing from the start, really. You know, closing down borders straight away. They've got their own ideas about how things should be done. So I think they will go. Maybe they go a full 0.5%, mate. I don't know. I know that the market is saying up to 1%, which would probably be about right because they're ahead of everybody anyway.
Yes, there's no reason to go 50, is there?
No,
I wouldn't have thought, because they will still be ahead of everyone else. So I see this as a sell zone for Aussie Kiwi, and for that reason, I'm very, very keen to find a way in. The weekly chart has also dished up a game changer bar. Now, I don't like trading red-bodied game changer bars or red-bodied anything short, to be fair. And you've got the monthly pivot dead in your way. But just what I asked for this morning in my preview, I'm now getting a test of pivots. So let's drill down a little bit into the Maya here and see what we can find. I can see a few false breaks up here, but I don't see a clear range. Maybe that's it there. And the reason I look for that is if I see 3 false breaks to the high side, I'm expecting previous range to break to the low side. I don't really see that range here. It's kind of a channel there, a short-term channel there, I suppose. But that doesn't really enthuse me either. Maybe I could twist it over here. It's not compelling, but it has broken down and now being retested. So that again gives me confidence if we can't get above there. Charts is okay. if we were to get a high test bar underneath the weekly pivot there, for instance, say closes that this candle closes here, I'd be willing to take that short. I do believe taking profit at the daily pivot and looking for further downside. That's interesting, but not compelling, as I said. And the daily chart tomorrow, if I wake up and it looks like that, it's going to be tough because the monthly pivot's dead in the way. So I've got to find a way in here. The best case for me always is going to be trading off a resistance area. And I just don't see that at the moment on the bigger time frames. Smaller time frames, maybe, but they're not there yet either. So I just don't have anything to get me into the market. Maybe that on an hourly chart looks interesting for some people. Down to the daily pivot, that would make sense. But I much prefer the bigger time frames at the moment. I think this is relatively immune to what goes on in Ukraine as well, because they're both risk-off currencies. So I don't think that there'll be a huge movement in this pair based on what happens in Ukraine. So for that reason, I'm far more comfortable trading this than let's say Aussie versus the dollar, or Aussie versus yen or Swissy, because I think it's far more likely that we won't be disturbed here in reason I've given you already, but both the technical and fundamental reasons. So that's going to be my trade if I can find during the week. There's a few more things I'm looking at, but I think it's probably to talk to George. Is George in the room?
I don't think he is yet, mate. No.
Well, that could be a reason why we wouldn't be talking to him. No, yeah. He's not.
No, not in the room yet. No, I'm just going to check Skype, make sure there's no messages there.
Yeah, I haven't Skype open on this.
Oh, there is a message. Gent struggling a bit with greeting. Oh, he's trying to get through traffic. Oh, you want me to join?
Righto, there we go. All I needed was have Skype open to know that. All right, so that's my thoughts on Aussie Kiwi. Now, pound Kiwi, I'm also a little bit interested in. Now, those of you who have been in this room for some time will know that I've been a massive proponent of trading pound Kiwi long, but only on the bigger picture. So let's take a look at that. This is the bigger picture. We are sharing my screen, yes. So I first picked this up back in September 2020. So we got back into here. We were looking to trade this long as a retest. So we're going back a good year. I've been looking to trade this up to about, well, maybe not even that level. I think initially I was looking at around about there. Would have been higher than that. Let me go back. Maybe there and maybe even there, ultimately. So up to 2.4. Let me extend that, make it look better. There you go. That's a long way away. I might be 80 before it gets there, but anyway, that doesn't matter. If we can trade it there and get not negative swaps, we'll be okay. So here's what I've been trying to do. I've been trying to trade this long ever since here. When we came back, I don't know where my little arrows have gone, but I've had 2 or 3 cracks at this, trying to trade it up to that level. Now, I missed the entry back in, couldn't see it, couldn't see an entry. It looked like creating an inverted head and shoulders here, but it just took off and hasn't come back yet. For that reason, I'm hopeful that this will come back and ultimately give me another shot. Where we are at the moment is showing, and this is a monthly chart, don't forget, showing a massive break of that trend line. Massive break. So that's a dominator to start with. If I wanted to trade this on a monthly chart, I would simply put my stop loss there and put an entry here. I think I'm over that part of the equation with pound Kiwi, because it just keeps oscillating on the monthly picture. So I'd much rather pick it up on a smaller time frame. At this point, however, I'm not seeing upside short term. I'm seeing downside short term. And the double top here gives me a little bit of reason for hope. What I'm looking for is a clear lower high. and the daily chart, should it give it to me here, would be very awkward. I need to see it pop back up into this area, maybe hit that trend line that is forming. So, maybe back up to here, deliver me a lower high, and then I can look to trade it short. It's going to take a lot of time, of course, and the 4-hour chart may give it to me a lot earlier than that. If we consider that we've got a trade line coming through here, and we pop up to the weekly pivot, hit that, find our way back underneath the weekly, back underneath the trade line, back underneath the daily, and retest 1, 2, or even 3 of those, then I've got a reason to trade it short. Don't want much, do I? But that's the way I see trading this. The only way I see trading this at this point, because I've got to have room between here, which would be my entry, and here, which would be my first take profit. Otherwise, I can't take the trade. Thereafter, I'd be looking for price to come, or really, it doesn't matter where it comes to, because I'll still be looking to pick it up, but probably in that vicinity, I would have thought. So even down here to the bottom of this range, to right on the $2 mark, that would make sense to me. Then I can start for the bigger picture, which would give us A, B, C at the end of the day on the monthly chart. So that's kind of where I'm at with pound Kiwi. And again, given the is tipped to raise interest rates, I completely see that as a possibility, and we'll be looking to do that as well. Lewis is on to Bitcoin. We'll be having a look at that in a tick. Ash, if you can prepare a Bitcoin chart, because I can't.
Yeah, no
what else am I looking at this week? 2 game changing bars. One of them was Aussie Kiwi. The other one was Kiwi. So the weekly chart is giving me both of those as potential trades for the week. But as always, with the game changer bars, it has to have context around it, and the context has to be on the primary trend. And the primary trend, I'm afraid, at the moment is definitely not down. And if it was, it's just been hammered by that monthly breakthrough of the monthly trend line. So impossible for me to trade that as a game changer bar, not least of which, agreeing with that analysis, is that I've got the monthly pivot dead ahead. So I actually can't trade that, but I can pick it up, as I said, on smaller time frames and trade it that way back to here. But then I'll certainly be looking for longs. Aussie Kiwi we've been through. My watch list really was Aussie Kiwi, but also the Aussie against the Swissy and the Yen. And this is, I won't say absolutely based in the Ukraine, but it's got a lot to do with it. The problem, I don't see anything here that really entices me to get into the market. That's the monthly chart. You can see that we're in this range and inside a wedge as well. Weekly chart is giving me a little bit more information, and that information is that we've bounced off the top of the wedge, if you like, and we've still got this area waiting down here that I've been pumping or plumping for, whatever that word is, for the longest time, ever since we saw that bar there, which is what, 1, 2, 3, 4, 5, 6 weeks ago. So I still think price is going here at some stage. If this is it, then I want to be on board. I need to see either a false break of the resistance area, or I need to see a clear lower high. Maybe this is it in formation, but is it tradable? That candle there, maybe, if you're really, really super keen, trading straight into support and the monthly pivot, not my thing. I'd much rather see a false break of resistance. So whilst my bias is telling me we're going down here at some stage, I still have to be patient and wait for that to set up. And it isn't at this point. This, of course, currency pair is very, very much a proxy for what happens in Ukraine, because if they do fire some bullets or worse, then this will fall very, very quickly, in my humble opinion. So would I like to be in that? Yes, I would. from a trading point of view, from a humanitarian point of view, of course, I wouldn't want to see that happen at all. But, and this is one of the weird things about trading at times when you come to these sometimes tragic events, and you kind of go, well, I know this should happen. Should I take advantage of that? Well, the answer is you can't change it. And if you are in the game of trading, then you have to take your opportunities where they lie. So you're not going to change the humanitarian side of it. So my opinion is trade what you see. It's pretty much that simple. So there's Aussie Yen, Aussie Swissy the same. Can't find an entry at this point, and really keen to trade this short if possible. There's just no way I can do that at the moment. In the meantime, should I be range trading it? Well, common sense tells me yes, I should. And I also saw this on a 4-hour chart this morning when I was having a look, which gave us not only a false break and a classic false break, it's one up, two consolidate, back underneath, retest. It's not only retesting the trade line, which was then a trend line, it's also retesting the daily pivot of Friday. It's given me a double cross on the weekly pivot of last week, and it's retested this trade line here. I really did solidly consider putting an entry underneath that bar, and I still think it's probably not such a bad idea. The issue I have is, where do I take my first profit? So right now I'd have to put my entry underneath this bar. I'm trading straight into that level, which doesn't really concern me that much, but this level here does. So I've only got 20 pips up my sleeve. And where am I going to put my stop? Am I going to trade the bar, which would give me a near 1-to-1 to that level? Or am I going to be safer and trade above the current market, which doesn't give me a 1/2-to-1? Or do I go ultra conservative and trade above the swing? That's the dilemma that I'm facing at the moment. So yes, I can see directional bias. Yes, I have a directional bias, but I'm not seeing exactly what I need to see to get into the market. And I think on a risk on versus risk off currency pair, that's probably going to keep me out of the market, because unless I'm really, really super keen and sure what's going to happen next, then, and how can you ever be 100%? You can't. Then I'd prefer just to stay out. This one here, euro dollar, I totally see an opportunity to trade this back to the daily pivot at some stage today. Trading that bar is not in my repertoire. However, what I see is a strong resistance area. That's only a 30-minute chart. But if you go to the 4-hour chart, you can see that it has formed across here, not only as resistance, but as support as well, and support through this level here too. So I think we can come off here. And what I need to see is, well, a couple of things really are possible. One is probably my favorite play anyway, is a false break of that area. Nice confluence here as well. And retest it, then I can trade. It's going to get tight towards the pivots, however, where I need to take profit, of course. So 4-hour chart, maybe not so comfortable. 30-minute chart we've had a look at. The hourly, it's going to be pretty much the same thing. I have to find the right trade line here. That'll probably be it. Let me get rid of that one. That's the one we want. Or maybe even if that lines up and gives me a pip perfect, then that's the trade line we would use. And it is 3 pip perfect points of contact. There we go. So I need to slide back underneath here and retest, same as the 4-hour. And if that were to be the case, then you'll definitely see me trade that short down to the daily pivot in the first instance. Whether I want to go further than that is a good question. And the answer is yes, I do. The reason, because the structure, the market structure, which is this broadening pattern, is telling me that we're hopping down to the downside. So that's where I'd be focused. So profit at the pivots, leave something open to go short. There's the nature of what I was talking about before. This V-shaped stuff is nightmarish to trade. That's not the one that was most recent, of course, but the Friday version of that which is there, makes it very, very difficult to trade and put decent money in the bank. Ash has got the right idea. Hit your first support or resistance area, get some money in the bank. Look for them. I think that's the way to go, frankly.
Yeah, money's in the bank, by the way, mate. The trade has.
Speaking of which, good man.
Yeah, we've hit take profit and actually a huge rejection from our take profit area as well. So we picked exactly the right zone as it looks right now, and I can tell you that the move down was pretty aggressive. I'll show you the show you the chart here. So let's.
And you can look at Bitcoin for
and then we'll look at
Bitcoin
as well. Yeah. So firstly, let's do this. Now I don't know how much of my chart you can see because I'm on this ultra wide screen. Oh, I can see what you can see. Okay, so you need more of this, don't you? That's probably a bit better. Is that better or not really?
Yeah, I've got it. Yeah, it's fine.
You can make it nice and wide. There we go. So we managed to get our profit, and as I say, the move down was, look at that, aggressive move down. So we were aiming up here. It just managed to get our take profit. Now I was saying that you could go to this upper line, but I don't think you're going to get there. I mean, it's the market hasn't turned, but there was a swift sell-off here. So there's orders around here all the way down, which were straight away triggered. So if this does get to this point, the suggestion would be that is probably a pretty clear area to go short. I'm not so keen on buying. If you weren't into this first move that we managed to get, I wouldn't be so keen to get in now. And actually, as it comes down to the weekly pivot, my perception of this has changed quite. I wouldn't say drastically, but significantly enough to that wouldn't encourage me to get in. I really did see a bit of a fire sale going on there. So market might well just be in a bit of a range. We might well see that the range is the lows here right the way to these points here. So going to get difficult, mate. I'll be seeing out.
It may just be what we're talking about, at the head of the show. And that being that this potential summit may mean absolutely nothing, and the market will still go risk off.
Yeah, well, I think that's absolutely right. I mean, what we had here was going into the 35. Let me just tell you what the data release was at that particular point. Flash services PMI from France at 58.5, expectation at 59.6, and flash services PMI from Germany. From Germany it was. Flash services manufacturing PMIs from Germany 58.5, not that major. Services PMI 56.6, so actually a bit of a boost up in services PMI. Might have just been a case of news came out and a bit of a sell-off, but yeah, it's recovering okay. So a very, very short-term move, but was a significant move initially, but the market has actually recovered okay. I don't know what happened. Let's just have a quick check of the euro, and that will give us an idea of whether it was those German numbers that forced the initial.
It's flip-flopping also.
Okay, all right. So it looks like it was those numbers rather than anything else, and it's always worth checking this stuff because you want to make sure that there's nothing sinister going on when the market does that. And all of look, so the euro pound sold off pretty significantly. So it looks like it was a euro thing. It was that euro data. As that gets digested, then the market will settle down again. But as I say, I'm glad to be out, and I won't be taking part in anything else, I don't think, today. So that'd be it for me. And I'll come back tomorrow. Now let's look at Lewis's Bitcoin analysis. So I'm presuming what Lewis is saying is have a look at the 1 hour and compare it with the sentiment cycle. So I'm presuming now, if we look at the sentiment cycle, the enthusiasm is the highest point, the boost to the upside. Then it starts to come down. We get a little climb of a wall of worry, and then the aversion trade here. Now, I'm wondering where you think we are, Lewis, because the enthusiasm being the highest point would suggest it's here. coming down, and then a little wall of worry, and down there. Is that what you're seeing as well? That this was the wall of worry as we climbed higher here, and now we're at the aversion point. Interesting to know what your
I would say
thoughts
we're
are.
still climbing the wall of worry.
I can't seem to make this any bigger. I'm only on. I can make the bars look a bit bigger. You think we're still climbing the wall of worry? Yeah, I mean, difficult one. I'd have to say, difficult one to ascertain where we are. Do you know that the chart that I think is the most interesting on Bitcoin is the monthly? And when I look at this, there's a possibility that we come down and test it, because the thing is, none of this was tested. You know, these were significant levels. It broke down, tried to get up. We got this sell off. No, that looks like a volume bar actually, but it looks like it's here. That looks like the area. So this is a little bit lower. That looks like it's there, around about 13,000. There was resistance there, and then we took it out. Now we haven't tested it. I don't know whether we do test it. But this area down here of support at the 28.5 is significant. If we break there, then it's possible that we come down that little bit further, and this line might not be right either. That might be a little bit lower in conjunction with that down there. So it's possible that we do actually see 15,000 on Bitcoin in accordance to the technicals. Vitaly Buterin over the weekend came out and said that we are going to welcome the crypto winter. So he thought, oh yeah, absolutely, Lewis. Yeah, that'd be fantastic, mate. He's asking whether he can show his chart, mate, which would be he'd be more than welcome to do, wouldn't he?
Yeah.
Yeah, Marlon, if you could give Lewis powers, it'd be good to hear what his analysis of Bitcoin is on the short term and the long term, actually. But Buterin coming out and saying that, I don't know whether that spooked the market again, but we did see a bit of a flash sale across the board after that. And regardless of anything else, mate, I think it's just going to be a tough year for cryptos. I think cryptos are going to be great value at some point this year, if they're not already. But I don't think that we're going to get the rally at the back of the during this front half of this year. I think maybe the second half might be viable. But I do think it's going to be a tough road for cryptos for a few months here as we reevaluate what risk is going to mean. Russia doesn't help anything, but even before Russia, we had the situation with interest rate hikes, and it does seem to be affecting people's risk attitude.
Have we worked out what drives the blasted thing yet?
Well, I don't know, but the closest thing that I can find is that it seems to be quite correlated to the NASDAQ. So I look at the NASDAQ just to try and get an idea of how people feel about cryptos. I think the NASDAQ probably expresses it quite nicely because it's tech and it kind
of makes sense, doesn't it?
Yeah. But things seem to change. I mean, certainly the inflation hedge argument doesn't seem to be working out currently. So that seems to be blown out the water. And if it's not an inflation hedge, a protection hedge, then you have to say, well, it must be a risk on currency, if you like, and maybe the best way to express that is through the NASDAQ. But with bond yields rising, interest rates going up, Bitcoin is not doing too well right now.
Yes, Lewis, we can.
We can't hear you though, Lou.
Hi, sorry, forgot to unmute my mic.
No problem, mate. No problem.
How are you guys?
What have we got?
Yeah, going well, buddy. How are you?
Okay, not too bad. I have recently keep shorting the indexes, doing okay.
Yeah.
Good.
Right. Yeah, I kind of like get out of my goal already, kind of I don't know what is happening. So I focus more on indexes last 2 weeks or so. Yeah. Someone actually brought my attention to this Bitcoin on the hourly chart. And if you can see my charts here, my picture here, that is
pretty decent, isn't it?
On the left is actually the sentiment cycle. On the right is the Bitcoin price on the H1. You can see a similarity, a very, very interesting picture over here.
Mm-hmm.
So
that
I would
double
like
top
Bitcoin to-
looks so close. That's really good.
yes,
That double top.
yes. So I'm looking at probably price, may come down a little bit more. I feel that I would like Bitcoin to go to 15,000, Ash. But looks like, if let's say things are following this sentiment cycle, then the next couple of days may be some revival of the Bitcoin prices upward, I feel.
Lewis, is that an H1 or a D1?
It is an H1.
Is it?
Yeah. Let me just take a look. You can double check it. It's on the D. It's on the H1. Sorry.
It says D1. That's why Ash is confused.
Not only does it say D1, but I've pulled up a daily chart on the Bitcoin, and it looks a lot more similar to that than my hourly.
Give me a moment, yeah. Let me stop sharing first.
Sure.
Let me go and take a look at my.
I mean, to be honest, I prefer it to be a D1 because the daily chart would have just a little bit more power in accordance to the sentiment cycle.
Oh yes, certainly. Give me a moment. Yes, I'm sorry. It's a D1. All right, I'm sorry. It's
D1.
a D1.
No, that's cool, mate. That's cool. I mean, that's better. I mean, I don't know why anybody would trade Bitcoin on an H1 in this current climate. Anyway, So D1's great. Okay, so what was it? Let's have a look at that chart again then. So if we're looking at a D1, what are we saying? Where are we? What were you saying, Jeff? You had an idea of where we were.
Well, on that chart, completely different because we're in panic at the moment.
We're in panic or discouragement. Are we down there yet? Wall of
Getting
worry.
to discouragement. Yes.
Here we go. Okay, you're there. Okay.
No, wrong chart.
Wrong chart. Okay.
Yeah, wrong chart. Sorry.
No, mate, it's fine. It's absolutely fine.
Okay.
Do you know what? It's a good job you're on top of this stuff because Jeff and I haven't looked at this at all, and really we are meant to.
Yeah, I was actually pointed to this by a friend this morning, so I looked at it more closely. I said, hey, why not? I just share you guys here this afternoon, and maybe it's something that we can discuss.
Yeah.
You can see that now.
No, we haven't got your screen yet, mate.
Not yet.
Okay, not yet. All right. Yeah, it's in. Is it?
Yeah.
Yep.
Okay. All right. Good.
Okay.
Yeah. So yes, it's confirmed. It's a D1. It's a D1 chart. So compared to the sentiment cycle.
Yeah, that looks good actually, mate. So we're in that discouragement phase potentially down there.
In phase 2 of discouragement. Yes.
In phase 2 of discouragement.
Yeah, so I probably there's a little bit more downside, to around say like 28 or 25 level before it bounce again.
I mean,
if it takes out that lower, look interesting. Yeah,
brilliant spot, mate. I mean, sentiment cycle is something that Julian is a great advocate of, and I don't look at it anywhere near enough. I know you look at it more than I do, Jeff. But not
on Bitcoin because I don't trade Bitcoin. So I haven't seen that chart for ages.
It looks good though, doesn't it? It looks really good.
Yeah, it looks very attractive, If price can come down for another probably another 5 or 10,000, I think it's a very nice level to enter.
I'll go with you on that. So we're looking at potentially 30,000 on Bitcoin to try and start picking it up again. I mean, I have been picking little bits and pieces up on the way down, but maybe the 30,000 is to just increase that number a little bit more, because I do think that when it comes down to these cryptos, I don't think they're going anywhere. And this, I love it when things come the other way. I find it a lot more exciting because then you get a bargain, don't you? Or you get a discount, I should say.
Correct. Yeah. In fact, I haven't had a chance to actually compare this with Ethereum. It may be very similar.
I mean, Ethereum's in all sorts of trouble as well. I don't think Buterin really helped with Ethereum. Let me have a look.
I'll stop sharing from now.
Mate.
Yeah.
Thanks, mate.
Yeah, that's okay, mate. Okay, so you can stop sharing, no problem at all, and I will bring up Ethereum.
Those of you in the room who have got no idea what we're talking about, by the way, and that's potentially quite a few, given that there are people who haven't been with us for such a long time. The sentiment cycle is very easily found by Googling sentiment cycle, and just have a little poke around there and see what we're actually talking about, because there is, without doubt, across pretty much all assets, the feeling of people who are trading and what the chart is actually portraying is the thought of those people and the reaction that they have to certain events relating to charts and, well, the market generally, really. So as the market goes up, you'll generally find that the buy the dip, as it says there on the sentiment cycle chart, that buy the dip phase has been going on forever and ever and ever, right? In the stock market, for instance. And now we've come off that a little bit, and we're going into, perhaps, I don't know, perhaps we've got another buy the dip scenario coming up. I don't know, but we could well be in that subtle warning phase that Ash is pointing out there. And if that is the case, then look out and keep your eyes peeled to the chart, because if you see something like that happening, it means that the market sentiment has changed and changed dramatically. And then everyone goes into this panic phase that you can see down the bottom, and then into what is discouragement, where everyone's giving up. There's nobody left to buy, and everything's just bottoming out down there. And then you'll generally find that there'll be one last dip below the lows, and we start to go into that wall of worry thing, where it just goes ever so slowly back to where really previously it broke down from the panic cycle. And it's at that point, again, that you want to pay attention, because if you then get that higher low scenario, that gives you the best possible ride that you can find in that particular sentiment cycle. So you got a long way to go before you get to there. But if this thing does in fact follow that sentiment of the market, then just compare the sentiment cycle that you can easily get a copy of off Google, and see if that's going to pan out. It will give you a nice bias. It will definitely do that, and it will explain to you what exactly is going on in the minds of retail traders, or in traders in general, frankly.
Yeah,
it's a very, very interesting thing.
It is, and I think one of the keys of the sentiment cycle is it does kind of involve periods of high volatility, and it's a lot easier to read in many respects than when you kind of get this block here, because the problem with this block is that, you know, it tends to be kind of shuffling along, and you know, you might get the odd kind of moment where it does fly down, but then it just flies back up again, and then it just kind of like stays within its range. But when this starts to break, as Jeff says, when it starts to break, then it breaks quite hard, and then it becomes a lot easier to follow the moves and seeing, you know, what's going to happen, and you get a better idea of when this happens. And this is the real start, the key. It doesn't mean that you're necessarily trading long from here, but if you can see this, and then the next thing that you see is a rally right the way back up to this initial kind of rally after the panic point, then you can start getting ready for a long, and it is a useful thing to start looking at. Now it looks like Lewis was talking about Ethereum. Looks like Ethereum's very similar. You know, Ethereum has done this thing already. So is it at this point now? Was that the initial panic area, and are we now starting to see the move back down into this area again, aversion? I'm not sure. I mean, I'm not sure whether we've actually finished discouragement yet. Maybe one more low, as Lewis says, would be better. We get one more low down here.
Yeah,
that would suggest we're here. Yeah, that would suggest
that's
we're
right.
here.
Exactly. That's what I'm waiting for. You know.
Yeah. All time frames, Gary. Yeah, I think it's one of those things that if you stick to, I mean, you know, this thing was brought to the market a few decades ago. And I think it's one of those things that if you think about what charts they would have been looking at all that time ago, because of the way they would have been able to process the information, it really would have been the longer term timeframes. But yes, it does work on hourlies and it does work on 4 hourlies, or you can certainly make an argument that it appears on those timeframes. But I personally wouldn't want to trade it on anything lower than a daily. I wouldn't want to get the messaging on anything lower than a daily, because what is enthusiasm and what causes panic? Well, it's something entrenched. It's something that's really kind of scarred the market to a bit more of a core point than something that you would see on an hourly chart. So I'm not saying that that's what you should do, but I wouldn't personally feel comfortable going below a daily. Even the 4 hourly would be a bit short for me.
I think it's like all things, mate. Isn't it really just study those timeframes versus the chart, the sentiment cycle chart, and make your own conclusion from that, frankly. But at the end of the day, I think, the monthly chart, the weekly chart, perhaps the daily chart, is reflective of the market in general, whereas an hourly time frame may well be a reflection of what retail traders are doing.
Yes.
I think there's a big difference there.
Yeah, agreed. But it looks like we've got some time to wait anyway. Either way, it looks like Ethereum and Bitcoin and all of them have got another low to make. Now, if that was to happen, then we can start saying, well, where would that low come in? Well, it looks like this area here at 1900 on the dollar value, that looks pretty good. And that would be quite a nice point for that to kind of pick itself back up. It would mean a fresh low down here. Would mean it would have to make that fresh low, which would be similar to this discouragement phase. And if it holds in this area and then starts to rally, I think we can then start to make an assumption that was potentially the bottom of the area, which gives us a decent area to start putting our stops. It could come down a little bit further, but the 1900 level looks pretty good. 2000, around about the 2000. It's a nice round number as well. So 2000 on Ethereum, that would make Bitcoin, if it was the same, using the same analogy, that would give us Bitcoin on the dailies, making a fresh low. Let's have a look on the weekly. Looks like around about this point, as Lewis says, 30,000, 30,000. Yeah, something like that. So it looks like 30,000 on Bitcoin. Looks like about 2,000 on Ethereum, and the others you could go through as well. You could go through ADA and Solana and XRP if you wanted to, but they may look a little bit different. But certainly ADA would look very, very similar to this. But this area in from what we're saying right now looks like a decent enough area to start building positions. And if it breaks down again, then you're probably looking at the next one down. But I wonder whether we might actually start to see some positions picked up down here, and this is the area that Bitcoin's going to get to.
If it does, in a few months' time, we're going to be looking at what's that level of the previous high where you
69.
No, sorry, the one
69,000.
Yeah, there, that one.
That one's at 60.
60.
60. Okay, so if it gets back to 60, we're going to be saying, "Wow, that's a massive head and shoulders sitting there."
Yeah. Yeah. Yes. So totally, completely agree. I mean, it would look like that, wouldn't it? There's the head. This would be the neckline coming up, giving us another one. And then, absolutely right.
What a sell.
Wow.
Yeah, do you know what? I mean, this is where you'd have to use your kind of fundamental knowledge of it, because I wonder whether if and it would be this coming down again. Okay, fine, but would it stop here or here? I think there'd be a pretty good chance of that. And the reason I would say that is that we'd be getting closer and closer to the next halvening, and that would be specific to when it gets here. If it got there quickly, I think this is in play. If it takes its time, I don't think that would be quite as significant, because I think the halvening is an event that does potentially promote further upside with Bitcoin as it becomes further deflationary. So I think it's one of those things that we would need to make a decision if and when it gets to this point.
What time frame have we got there?
This is the weekly.
No, sorry, mate. Well, okay, so we're talking 2025 or something.
Yeah, exactly. Or certainly 2023, because this is representative of about I don't know what it would be actually. Can't get rid of this. Oh, that's right.
The last high was like 2 years ago, 1 year ago.
Yeah, this is 2020, March 2021.
Okay.
So no, actually
1 year later from now.
Yeah,
okay.
1 year. So yeah, potentially 2023, 2022, 2023. Yeah.
So then Bitcoin goes back to zero after that. Interesting.
Well, you know, mate, I mean, this is the thing. If this gets up here within the next year, I think there could be the argument for the head and shoulders, certainly coming down to the neckline again. So it's going to be an interesting ride, I think, with cryptocurrencies over the course of the next year or two.
Well, look at
but
that,
a rally looks on.
Look at that little head and shoulders that's already there inside the head. That's played out already, pretty much.
Yes, it has. This one here.
Yep.
Yes, it has.
So I think 30,000 is probably one of the key resistance. If they break 30,000, and it will go further down. If there's this resistance there, then you will bring us back to maybe 55, 60.
I agree, mate. So what we're saying is that that the range on Bitcoin is potentially for a 100% gain in value, which if you get your 100%, then it might be time to be taking some profit or reevaluating what you want to do with it. Maybe taking all profit. I don't know, but yeah, looks like a 100% run with Bitcoin could be on though. So picking it up at 30,000 is looking hyper attractive to me.
Wonderful.
Yeah, good stuff, mate. Thank you very much.
You're welcome.
Yeah, cheers, mate.
We're buddy, man. We share good stuff here.
Yeah,
that's what we're
absolutely.
here for.
Well, that's what it's about, isn't it?
Mate, have you had a look at that on gold recently? We were talking about that ages ago. Yeah.
Yeah, you were looking at that, weren't you, Lewis?
Yes, Lewis. Yes.
All right.
You were looking on the weekly chart.
I'm actually out of gold for like almost a month. I took it down all the way to 1830 something, and then I just out of the market, and then I mentioned earlier, last 2 weeks after my Chinese New Year holiday, I kind of focus more on the shorting the indexes for the last 1.5 2 weeks. Yeah. So I'm kind of like not so up to date with the gold at the moment.
Okay.
Yep. But you mentioned that the gold weekly chart is very similar to the sentiment cycle at the what stage? The subtle warning stage, or something like that.
Mm-hmm. Yes, it was something like that.
Yes.
That we were talking about some months ago. I think it was. We were talking about that.
Correct. That's about 3 or 4 months ago. Yeah.
Yeah. I still can't get the double top out of my head on I think it's the monthly chart.
All right.
Every time I look at that, all I see is a double top.
Right.
Yeah.
But
by the way, kind of like Miss Ansley for not hearing her gold story on the weekly basis.
Yeah, well, do you know, mate? I think Ainsley's around somewhere, and you could probably find some information with her. But the interesting thing for me about gold is that we are heading into a point that that seasonally actually starts to suffer a bit in March. So really, the rally in gold you would think would have to be potentially carried up until the next 2 weeks. But if all starts to calm down on the Ukrainian front, then gold may well go into a bit of a slump, because the Fed are about to raise interest rates, and that would push bond yields up, which is never really that good for gold on the whole. And you've got this potential for a seasonal bias to the downside. Now, I think longer term, gold continues to push higher, but I wonder whether if you're not on board already, now's not the time.
Yeah, in fact, looking at the chart right now, right, it's pretty tempting to short it actually.
Yes, it is. Yes, it is. I'm not sure whether I'd want to make that play with the current environment. Really.
No, with the environment,
correct.
no.
You know,
It's a tough play.
I'm still so anxious to wait for the first bullet to be, fired in Ukraine.
Yeah. No, it's. I mean,
Those are the market made, I think.
Yeah, they absolutely are. I mean, the United Kingdom's Prime Minister is all but saying that that's about to happen, and things.
Oh, so is Biden's advisor. So is Australian Prime Minister. I mean, obviously the prime ministers and presidents have had a little powwow, and they're all on the same page. Are they promoting it? Really?
I don't know, but I tell you what,
that's the way it looks.
That's possible, mate. But I'll tell you what they possibly are doing is basically saying that they might be expressing this thing to Putin to say, you know what, we know what you're doing, so we're ready. I mean, that might be sort of more of it might be more kind of propaganda rhetoric than anything else. Because they've got if they say, I don't think he's going to do anything, and then all of a sudden, he's in the back of the Kremlin going, ha 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 ha, then they're going to look really dumb. They're looking like sitting ducks, aren't they? So I wonder whether it might just be a little bit of horseplay going on, as if to say, look, you know what, that we are preparing, we are prepared for you because we know what you're up to, and you're better off going down that route, I would have thought.
I don't know. I've got no idea. As I said from the outset, I've got no idea. Absolutely no idea.
Yeah.
And
sorry.
You're right. You go.
So under normal circumstances, you come to war situation. So meaning that the stock market will suffer. Safe havens, what do you call it, currency or asset will rise.
Yes.
But then it's kind of like very much differ from the seasonality on the very long term basis.
Yeah. So the stock market absolutely will suffer, and the safe havens, as you say, will get bid. So that's why gold and silver have managed to gain some significant popularity over the last few weeks. But it's one of those that let's hope we don't get there. Let's hope it's not like that. I mean, it'd be the easiest trade in the world, but we just don't want to. We don't really want to kind of like have. I'd prefer trading to be challenging and us to have peace rather than being able to make some money out of something which is potentially pretty horrendous.
Yeah, so, definitely. We certainly don't want to have any war. In although we are not in the affected party, but I think it's not good for many people.
Yeah, look, in many ways it'll drag us in somewhere, Lewis. Don't worry about that. If this one happens, there's no doubt. Mate, you just got to, just for my entertainment alone, can you go to the monthly chart there, please?
The monthly?
Yeah, just for my entertainment. Yep. Now put a circle around left-hand high and the right-hand high.
The double top.
The double top, mate. It's there. And look what happened after the first top. We came off, went up, and then we crashed. Oh, what's happening here? Same. Interesting.
Yeah, that is interesting, actually, mate. Yeah, so what you're saying is that there's a little bit of symmetry with when we got under this level.
Yeah. And you see the level is pretty similar,
Yeah, it is. I mean, how many attempts did it have?
But you know what happens if that plays out? Gold goes to $24 or something. That's not likely to happen.
The other time we were talking about 1,500, something like that. 1,500. If you put a line there.
Yep.
12 to 1,300 would be okay. Let's just see what I got here. So what you're saying, Jeff, is there's a chance we come here.
I am.
Yeah.
I don't know how that happens, frankly, but from a fundamental perspective.
Well, I mean, we are certainly not in any position to say this will happen or this will or won't happen. I think it's just one of those things that we just got to be aware that it could. And
look, I love charts, and charts, very, very often tell me what's going to happen. And I don't know how this happens, what causes it, if it's possible, but I can totally see it from a chart.
I agree, mate. And do you know the interesting thing about what you're saying there is that this would be a lot more comfortable a buy if we had done this already. You know,
Yeah, for sure.
It broke out of this range. It hasn't really tested anything. It broke out of here. And it hasn't come back and really cemented it. Okay, you could argue that. You definitely could argue that. But it would be better, I think, just to get one more push here and then go.
Wow.
That would be better. A little bit of an inverted head and shoulders possibly as well as an argument. You know, we know what 1,400, between 13 and 1,400 ounces, dollars per ounce. We know what that does to the miners. You know, it makes it completely unviable. And a lot of them would go out of business, which would increase supply, increase demand. Well, demand would potentially stay the same, which would decrease the supply. So it would be easier, wouldn't it? It would be a lot easier. Gold is difficult here because if you are buying because of what happens with Russia, you are flipping a coin. That's gambling. You know, nobody knows what's going to happen. We know it could happen, but that's gambling. The only way that you take the gamble out of the equation is by saying, I am going to buy some gold as protection, but I'm also going to make sure that I've got some risk on just in case gold doesn't do anything. And at least I've managed to hedge out my risk. So I think the distinction between whether you are a trader or a gambler almost needs to be made. You know, what is a gambler? A gambler is somebody that goes in at something at 50-50. A trader is somebody that goes in and sees an opportunity and gets informed and says, I'm making an informed decision on this and I'm going to buy it, you know, and I'm going to protect my capital this way and I'm going to make an informed decision on this. And my opinion is that I've got a probability that this is going to go here. And that takes the gamble out of the equation, to my mind. And I say this to people all the time when they say, you know, you're gambling. I say, look, if you buy a house, that's no different to what I'm doing. You know, you are making an informed decision on investment. You don't know it's going up in value, but you presume it would because over time in history, that's what's happened so far. So it's an informed decision on trading, but this would be a gambler to my mind. You buy here because of Russia, you're gambling.
And you want to be very careful with that buying property at the moment because it's as high as it's ever been in most places.
Oh, that brings us on to our new show, Jeff. Property with Ash and Jeff.
Yeah, I'm qualified in some regards because I managed to buy at the bottom of the market, at the top of the market, and sell at the bottom of the market a couple of times in my life.
Yeah.
So yeah. I'm qualified to say, don't do this.
Yeah.
Then we're gonna bring in another new buddy.
Yeah, we need another new buddy.
New buddy, the Mikey, you know.
Yeah, well, it's a big thing.
I'll tell you what we need to do. We need to get out of here because I've got
we can talk for quite some time. Thanks so much, Lewis. That was brilliant to have you on, mate.
Thank you for having me.
Yeah, really
cheers,
appreciate mate. the Bitcoin stuff. Anytime, mate. And this runs for everybody in the room. Anytime you guys got anything that you think is of interest, even if it's just a conversational point, please come on. You know, just kind of feel free and comfortable to come on with us because this is what this show is meant to be about. But as for now, thank you for being our trading buddies. Thank you particularly to you, Lewis and Jeff, for being my trading buddy. Thanks to Marlin for looking after us. And I guess we'll be back on Thursday to do it all again.
We will indeed.
See you guys.
Cheers, mate. Better leave you with one thing. The trade that I mentioned with euro dollar has almost set up. We've got 17 minutes to go. If this candle closes as it is now on the 30-minute chart, there is a trade short here.
You're short it.
Yeah. So you can go 1-to-1 to the daily pivot if you want. Or is there more in? I can't remember if there's more in this. I think that would probably do because it's likely to bounce back up here. Right. So I think there's probably a 1-to-1 trade there on the 30-minute chart on euro dollar if the candle closes as is. What was the other one? Aussie Kiwi. Aussie Kiwi has so far refused to come back above that trade line, so currently bouncing off the weekly pivot and trade line confluence area. I don't know that I can find a trade off it, but it could well be meaningful. Maybe there is. Maybe there is. No, I need one more touch. only one more touch here, or a false break up here. So that's not on just yet, but keep your eyes on that one for short on Aussie Kiwi. But the euro could set up very, very quickly in the next 15 minutes or so. So yes, indeed, echoing all of Ash's thoughts. Lewis in particular, thank you for your contribution. Marlon, thanks for looking after us. Everybody who's been in the room, I hope you've got something out of it. And thank you for being our trading buddies. We'll see you Thursday. Bye-bye for now.
See you. Bye-bye.